You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again for the Crypto Rundown, the program here on the Options Insider Radio Network, where we go a little bit beyond our traditional stomping grounds. Not going to talk about your VIX or your Apple or your SPY options on this show. Nope, we're going to go a little bit further afield, see what's cooking in the crypto derivatives markets. Maybe talk a little bit of the Bitcoin, the ETH, the volume, the volatility, the unusual activity, the skew, all that fun, and a whole bunch more. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which so many of you are binging these days. A couple things to remind you of right at the top of the show here. First off, we see a lot of new people coming into the Crypto Rundown all the time who are, shall we say, crypto native. If you're just listening to the Crypto Rundown, first off, you're missing out on a whole heck of a lot of other great content, nearly a dozen shows coming at you on the network, including a lot of great educational content like Options Bootcamp, Options Playbook Radio, the Strategy Block segment of our Option Block show. You should be checking all those out. So make sure wherever you're getting this show, you get the full network, the Options Insider Radio Network coming at you. And then, of course, you should be checking out those other shows. They'll help you out if a lot of these terms we're throwing at you are new, like skew and volatility and all these things. Those shows will get you up to speed pretty quickly. And then, of course, if you like what you hear, a like, a comment does go a long way. This network's been running for coming up on 17 years in January, which is crazy. But the new reviews, the new comments, all that stuff does help new people continue to discover the content. So if you like what you hear, throw a like, a star, a comment. It does help new people, and they're a legion these days. New people continue to discover the content. Of course, if you want more content in your lives, including a lot of great pro Q&A sessions that cover the overlap of crypto and derivatives. You just had Simon Ho, the Spikes father, also creator of BitVol, other great crypto volatility products on our pro Q&A hot seat. If you want to access those pro Q&A sessions and a whole bunch more, only one place to go, theoptionsinsider.com/pro, the place to go to learn more, get access to all of the live streams, all of the pro podcast feed, the giveaways, everything else we're doing over there. Theoptionsinsider.com/pro is the place to go, as it's time for us to go right on into the crypto hot seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the interview portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond and proceed to pick their brains for the benefit of you, the listener. And next up in the old Crypto Hot Seat, a newcomer to the program and indeed to the network, he is Michael Dunn, the president over there at Bitnomial. Michael, welcome to the Crypto Rundown program.
Hey, Mark. Glad to be here.
And Michael, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the world of crypto and indeed derivatives, as well as what it is you folks do over there at Bitnomial.
That's always a good question. Yeah, sure. As you said, I'm the president of Bitnomial Exchange. We are a U.S.-based CFTC-regulated Bitcoin futures and options exchange. My background is I've actually been in the derivative space for about 13 years now. I ran a market-making desk at an algorithmic trading firm. We traded everything from fixed income futures all the way to equity index products like the S&P 500. So I've definitely been around the block before getting into the crypto space. I actually learned about Bitcoin back in 2014 during that ramp up there, as you probably remember, and 2014, 2015. Then I joined Bitnomial in 2016. So yeah, I've actually been in several crypto winters at this point, and in fact, I've even been around so long that the term crypto winter hasn't even been coined yet.
You're old school compared to some of our guests out there now.
I'm ancient now.
But you mentioned Bitnomial. Let's get into that a little bit out there. Obviously, this is the first time you folks have been on the network as well. So give our listeners a bit of an overview. What is Bitnomial? What can we trade over there these days?
Yeah, so Bitnomial offers Bitcoin futures and options right now. And the main difference with our products is that they're physically settled versus cash settlement. So I don't know if your listeners are super keen on the difference there, but let me explain. So when a futures contract goes into expiration, there's a couple different ways that you can settle up the difference there. Cash settled, usually there's a final settlement price and you settle up in dollars based on that index. With physically settled futures, you actually exchange the commodity for dollars. So think about commodities like WTI, which is the West Texas Intermediate crude oil. When you take that in delivery, you actually receive the crude oil in Cushing's, Oklahoma, right? Well, for our contract, you actually receive Bitcoin on final settlement. So that's our main differentiator.
It's interesting because that was all the rage, I want to say, a couple of years ago, which I believe back in late 2021 was when you guys launched your futures as well. We saw a bunch of players diving into that. Of course, LedgerX, we all know kind of what happened there, unfortunately. Also, other players like Bakkt and everyone was racing each other to get into the physically settled, the physically delivered side of the space. It seems like that has somewhat cooled of late. People are switching to the cash settlement side. So I'm curious from your perspective, Michael, why did you guys decide to go the physically settled, physically delivered route first?
Yeah, well, I definitely say that this is a marathon and not a sprint. Okay. So if you look at all of the leading commodities markets in the world, most of them are physically settled. And why? Why is that the case? That's because the people who are actually producing the commodity have physical exposure to that risk. Now, you can go and use cash settled contracts to do that. It might be easier from an access perspective, but ultimately you need to be able to manage that physical risk, and only our contracts can do that.
So is it fair to say then with your contracts that the lion's share of the use case is going to fall in line with what we saw on some other platforms, a lot of covered calls and a lot of short puts to get into spot Bitcoin? Is that the predominant use case?
I think the predominant use case, actually, there's quite a few of them. I think, there are option strategies that you can run on our products for sure, right? So one of the things you can do is you can just write those covered calls. You can earn some yield on there. I think that's particularly useful in Bitcoin. ETH is a bit different, right? Because you can stake and earn yield in that way. But Bitcoin, unless you're willing to lend it out and have counterparty risk, it's pretty tricky to earn yield on that. So option strategies are very popular. I would say the other strategies you can run is treasury management, right? Holding physical Bitcoin in your balance sheet is expensive, right? If you were able to convert them into futures positions instead, you can actually have quite a bit of reduction on the balance sheet. Let me talk about that a little bit because I think that's interesting. So say you're long 100 Bitcoin, right, on your balance sheet, physical Bitcoin. What you can do is you can actually sell the front month future and you can buy the back month future, okay? Take that front month to expiration, which means you deliver the Bitcoin to your counterparty. And now you just have long Bitcoin futures exposure. And since they're margined at 30% on our exchange, you actually receive 70% of that USD back on your balance sheet to use for operating expenses, who knows, whatever else you want to do. And you can see how this is pretty popular for Bitcoin miners and mining pools, as they're kind of heavy Bitcoin but short on the cash.
Well, that leads to my next question. We saw a lot of the early adopters of these physically settled derivatives are obviously, as you mentioned, the end users, the miners, the producers out there. Would you say those are the lion's share of your users as well these days?
Yeah, definitely. It's going to be the miners, producers, and then obviously anyone who wants the physical exposure but doesn't want to pay up and have to pay 100% down to the physical Bitcoin. That even goes from hedge funds.
And, I was intrigued by a lot of the physically delivered products. I was kind of surprised at, I won't say the backlash, but a lot of the I think, lack of adoption we saw with those products out there. For whatever reason, people started gravitating more towards the cash settled side. It does seem like that is the trend we're seeing out there right now. So any thought over there in following that trend and offering a cash settled flavor as well?
Yeah, I think the trend might be a bit misleading, to be honest with you. I think some of the volume numbers will show that. I really think that it's an access problem. Look, you have to understand, physically settled contracts have different risks associated with them, right? Those types of risks take a while to understand, manage, and get comfortable with. This isn't something that can happen overnight. A lot of the institutions that deal with these contracts need to know what happens in terms of delivery, what happens if the delivery can't be done, things like this. But once all of those things kind of get out of the way, it is a superior product. I think that the cash settled contracts being popular is mostly a function of ease of access, but ultimately it's an inferior product. And I think as the industry matures, people are going to have a harder time scaling those types of trades with cash settled products versus a physically settled product. I mean, look no further than if you were to, hedge physical exposure in a cash settled market. So the way that trade works is that you actually have to sell the futures, okay, when you have the physical exposure of Bitcoin. And then before the futures contract expires, you actually have to get rid of the physical coin. Because ultimately, you need to free up that cash. And the problem is that what you can sell that physical coin for is going to be different than what the contract expires to in the cash settled index. With our product, you sell the contract, you lock in your price, and you deliver it, it's done. So if you've ever been a trader, you know that doing 2 trades instead of 1 with price slippage, that's a recipe for disaster. And especially if you have hundreds of $millions on the line.
So you're in it for the long game then. You're saying they're going to come back around, pivot back to you and physically settled at the end of the day, Michael.
Well, I'd actually say that they never really were here in the first place. I would actually argue that a lot of the players in the space mostly were offshore and OTC. And I think we're starting to see those players finally moved into the U.S. regulated markets for the first time. And I think that they're going to bat an eye at the cash settled products. Speaking
of those U.S. markets, they've been a little bit challenging. Particularly over the past year. It's hard to believe it's pretty much been about exactly a year since the whole debacle with FTX. It does seem like just yesterday I was walking into the Futures Industry Association Expo here in Chicago, the big annual derivatives show. All the global derivatives business descends on Chicago for a week, and walking in the door, I saw them hastily scraping FTX off the wall as their platinum, whatever the heck they were, top tier sponsor over there. So that was kind of eye-opening at just how far those tendrils had reached into the world of established derivatives. But obviously, managing and navigating these waters as a physically settled crypto derivatives exchange, we all know FTX also acquired LedgerX, one of the other early players in this space. Walk us through that a little bit. What's the last year been like for you guys and gals over there, managing and navigating these waters in the wake of the FTX blowup, Michael?
Yeah, I think it's been interesting. It's been good. Look, I think that a lot of people around the world we're starting to question a little bit what it's like to be in the U.S. regulated market. But honestly, it's been a tailwind for us. And that's mostly because, look, the offshore exchange risk and the OTC and bilateral counterparty risk that you have out there is massive. Look no further than FTX and even the most recent, and then Genesis even. So we talked to a lot of customers who did a lot of trading with Genesis, and they can't do those types of trades anymore because the risk is too high. So they're looking for cleared listed derivatives, and they're coming knocking on our door. They want that exposure. They want to be able to do a trade. They want it. They want to know that they have that locked in, and they want to make sure that no matter what happens to their counterparties, or that they get that trade on, or and that the platform just doesn't vaporize overnight like FTX.
Yes, clearly a concern post FTX. Of course, the crypto derivatives game has been a challenging one, even for some of the more established players in the space. Back in 2017, we saw everyone get hot and bothered about CBOE and CME getting into the game, listing the first real, I would call them real in air quotes. The futures options came along later at CME. We never got to the options at CBOE because they got out of the game. Interestingly enough, they're getting back in now. It seems like, at least in January of this year. So it's been kind of fascinating to watch some of the traditional players in the world of derivatives also struggle to get their foothold in the crypto space. Even the products they've listed at CME, I mean, they ended up launching an ETF off of it, so that's been a win for them, but they've never been explosive from a volume perspective, even the micro-sized ones. What are your thoughts there, Michael? Why do you think even the established players in the derivatives world, why they've struggled to really make any headway in the world of crypto derivatives?
Yeah, well, I think it comes down to how much they're willing to stake in their offering. Like we've seen, cash settled products, they do serve a purpose. And I think the barrier to entry is low, but ultimately, doing a physically settled contract is hard. It's really hard. It's tough to get people to buy into it. But it's what the market needs. And we still talk to a lot of our customers, and they are very much underserved there. So I think it's tough for big institutions who have a lot of different stakeholders who, by the way, might not believe in crypto at all to kind of get that buy-in and do a product like we have. We're all in on it, right? This is all we do. We only have a Bitcoin and futures contract right now, and this is it. We got into the whole game to do this one thing. And I think that our focus has been something that's allowed us to kind of grow. And I think it's going to be a problem with the bigger incumbents just because they're too diffuse in their objectives. And ultimately too, they have a board and shareholders to appease. And I think that crypto is just a small part of that, and where this is the only thing we're doing.
That's true. A lot of different stakeholders over there at CME and others, and they want them to pivot in many different ways. Crypto, just one of them. I think you're coming on the show at an interesting time, Michael. I think I'm legally obligated to ask you about the upcoming ETF. Everyone's all hot and bothered right now. Before we get there, Michael, we do have a poll out to our audience right now as well. So again, you have good timing joining us on the show today. We can know at the end of the day, our audience, the ultimate arbiter of all things out there. And we asked you, maybe a little bit tongue-in-cheek, but we said let's have a little bit of Thanksgiving fun. It is a shortened holiday week after all, and it does seem like everyone and their mother and their grandmother all hot and bothered about crypto again. A lot of it in anticipation of the approval of this new spot ETF coming this year that everybody is excited about. So we put it out to you folks. Quite simply, will the new spot Bitcoin ETF be approved this year? Very simple. No four choices. Just simple yes, simple no. Right now, almost 2/3, 62.5% of you saying no, 37.5% saying yes. Again, this just went live before the option block a few hours ago. This will be our question of the week, so it'll run the rest of the week. So if you're listening on the podcast side, you'll have a chance to vote as well. But Michael, this is obviously the talk of the town right now. This is the rising tide that is lifting all crypto boats and probably causing your phone to ring over there a little bit as well with some renewed interest in all things Bitcoin derivatives. What are your thoughts on this impending spot ETF? You think we'll see it anytime soon?
That's a great question. I mean, soon is relative. I think so. I think there's a lot. I think the cat's out of the bag. I think a lot of people, I think the demand for it is insanely high. And personally, I think the biggest holdback for Bitcoin right now is adoption. I'm sure you can agree. Having a spot Bitcoin ETF, I think, would be a game changer. People being able to put spot holdings in their 401k is like that. That's huge. And I'm sure you've even seen the charts of, what happened when, the gold ETF, pre-gold ETF, post-gold ETF, and all of that kind of, inflow and things like that. So I think it is a big game changer. I'm really excited about it. I think that Bitcoin is one of those technologies where a lot of people that want to use it don't necessarily need to understand how to use it in a very nuanced way. And I think I like to explain it like this. You don't need to know how to, use a internal combustion engine in your car. You just hit the gas pedal and it moves you forward, right? You hit the brake and it stops. People want to use Bitcoin in that way. They see it as a maybe an inflation hedge, a store of value, or whatever they want it to. And if they can go and buy an ETF to get that type of exposure, I think that's fantastic.
We talked a lot about Bitcoin here, but I know for our audience, a lot of them are all in on all things ETH. I've said many times on this show, I think Bitcoin will very much be the vanguard. It will get all the headlines around things like this upcoming spot ETF. It'll also get all the regulatory attention and probably eventually pave the way for some other projects to come along and maybe succeed in its wake. I'm curious for you, Michael. It sounds like you guys and gals are all in over there on Bitcoin as well, but a lot of people are interested in ETH and maybe even some other projects. So what do you think is catching your eye in terms of maybe has the most potential down the road, especially from our and indeed your perspective, the potential for an intriguing crypto derivatives market down the road, Michael?
Yeah, I still think that for right now, Bitcoin is still the leader in terms of market cap and volume. I think it's going to be the leader in the space for a long time. It really has some undeniable and unique properties as a commodity that are highly desirable. And so I think it's going to be the front runner for a long time. But ETH, on the other hand, has a lot of unique properties in terms of being able to stake and earn yield, which I think a lot of people really like. And I think it's a question to be seen how that impacts the lending markets. As we talked about earlier, really the only way to earn yield on Bitcoin is you either lend it out or you can trade some option strategies on. You can write those covered calls and earn that premium, right? But for ETH, you can borrow and stake it, earn a yield, pay some interest on it, and close the spread there. So I'm definitely interested to see how ETH plays out, and I think we should be ready to take on those contracts here in the near future. But I'm excited to see where it goes.
Well, speaking of the near future, that gets right into my next question. Obviously, we talked a lot about Bitcoin here, but maybe there's some ETH on the horizon or maybe some other fun products we haven't had a chance to talk about. So before we roll out of the crypto hot seat for this week, what can they look forward to coming down the pike from you and the team over there at Bitnomial in the coming months?
Yeah, so we're going to our main focus is bringing institutional players into the crypto US regulated space. Okay, so we're focusing on Bitcoin futures and options. ETH futures and options will be coming down the pipeline. And we have some other new innovative products, and unfortunately, I can't talk about right now. But I definitely think they're unique to the crypto space and the digital asset space in terms of hedging needs. What I really want to start doing as we build liquidity and volume too is start to look at different options expiries. It's really hot right now as I talk about the 0-day options. So I think at some point in time, we'd like to do something like that and allow people to do those really nuanced hedging. Even from a day-to-day basis. So really, we're just trying to build products and ease of access to the crypto space and focusing on driving volume and open interest.
Ooh, 0-day crypto. You're hitting all the buzzwords there, Michael. I actually lied. I have one more for you because you hit on another interesting buzzword that's been intriguing to me ever since we launched this show back in early 2018, I believe it was. So it's still the newcomer to the network for me, even though it's been around for a while. But one of the ongoing debates, discussions we've had on the show is what really is the institutional level of interest in all things crypto. And I've often, maybe only half jokingly, dismissed that as saying, where is Bitcoin trading right now? If it's below 30K, institutions don't really care. Now that we're back above 30K, maybe they're starting to care again. So I'm curious for you, Michael, you spend all your day out there trying to foster and engage with that institutional demand. Have you seen an uptick now with this recent, let's call it ETF-driven rally? Are the institutions starting to care again now that Bitcoin is north of 30K? Is it all that simple at the end of the day?
I think there is a bit of simplicity here. Look, I think the institutions care when, it's a reflection of what their customers want, right? So if the customers want Bitcoin exposure, that typically happens during a rally, as you know. And so I think institutional demand rises there. So as they put on exposure and they and they trade with their customers. That flows into derivatives markets because it's the best way to manage risk in a capital efficient way. So I think there is an increase in institutional demand, and hopefully we'll continue to see that going forward.
Well, Michael, we have to keep rolling with the show, but before we go, if our listeners are intrigued, they want to check out what you and the team have to offer over there at Bitnomial, where should they go? What should they do?
Yeah, they can just go to bitnomial.com. That's bitnomial.com. And you can check out our products, some of our liquidity and volume stats, and reach out to us. And we'd be more than happy to help you get on board if that's what you want to do. And bitnomial.com.
Well, Michael, I appreciate you taking some time out of your day to explain a little bit of Bitnomial for our listeners, talk a little bit of crypto derivatives. Obviously, we love to do that here on the show, and we'll look forward to seeing how all these initiatives and all these products we talked about here, how they unfold in the marketplace in the coming months.
Thanks, Mark.
All right, listeners, now it's time to keep on rolling and explore the Bitcoin breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown. Always fun to have another crypto derivatives exchange in the old crypto hot seat. When we first launched this show, it seemed like every week there was a new crypto derivatives exchange popping up, and we're going to be the new fill in the blank, CME, CBOE for crypto. A lot of them have gone the way of the dodo. Haven't seen too many new players jumping into that space, so it's good to see a Bitnomial taking their tilt at the windmill. Interesting stuff. Physically settled. Is that needle going to pivot back to that area? Certainly an interesting debate and one worthy of having here on the show as we keep on rolling to get out to the meat of the show, see what's cooking out there across the landscape of crypto. Let's start with the big dog, which is Bitcoin. Once again, looking a little bit bigger than it was this time last week. On our show last week, 36,800. Coming into the start of the show today, 37,665, up 865 handles on the week, listeners. The high came a couple days after our show last week on Wednesday, almost hit 38K, not quite. 37,965. The low came right after our show on Tuesday last week, 34,949, so dipping right below 35K. So a decent little range out there, which is probably why we're seeing vol come in slightly or kind of tread water. It depends where you look. If you look at the nearer dated portion, and by the way, of course, all these metrics and stats coming at you, courtesy of our friends over there at Amber Data. Kick the tires and light the fires over there at amberdata.io to learn more. Well, let's start near dated and work our way out as we are wont to do. We'll start in the weekly vol. Listen, a lot of you folks like to play in the near dated stuff. I get it. So the 7-day vol right now, right around a 53. And a week ago, it was exactly a 53. So not much evolution there on the 1 week vol. If we go a little bit farther out the curve, out to your traditional measurement, your metric for volatility, the 30-day vol, we're at about a 53.70 right now. It's down about exactly a point. It was 54.70 a week ago. So still roughly in that same range. And again, almost 2x what it was just a month or two ago. So a little bit frothier out there. Not quite at the nat gas level in the mid to high 60s, but crypto starting to threaten again from a volatility perspective, certainly compared to a lot of the other assets we talk about over there on shows like This Week in Futures Options, which you should be checking out if you listen to this one, listeners. Let's go a little bit farther out. Let's go all the way out 6 months and see what's cooking out there. It's actually about exactly a 60.1 to be precise this week, 59.4. So longer term vol actually ticking up nearly a point. So a 60, 6 months out is actually a reasonable amount of vol out there. So that's impressive. That's getting back to not quite where we were not too long ago. We were in triple digits not too long ago, obviously, in Bitcoin vol. But again, 60, 6 months out, certainly interesting. Let's get out to the Skew and see what's cooking out there. Again, if all these terms were thrown around, if they're a little bit overwhelming to you, check out our Options Bootcamp, Options Playbook radio shows. They will serve you well in this capacity. 7-day Skew, so the weekly Skew, which is where everybody's playing these days. You ignore weekly Skew at your peril these days, listeners. 7-day Skew at about an 8 right now. Again, that means the 25 Delta calls trading at an 8 volatility point premium to the 25 Delta put. Again, if all that's voodoo to you, you know where to go. Last show, we were at about a 5.5. So getting a little bit more bullish this week. I guess our poll causing folks to get more optimistic on the prospects for that ETF. Maybe it's just holiday fun. Whatever it is, folks looking a little bit more optimistic, looking to a little bit more upside for Bitcoin this week. In terms of the 1 month skew, similar story, not quite as extreme out there. Last week we had about a +5. This week, almost a +6, about a 5.9. So getting a little bit more bullish out there on the 1 month skew as well. And then going all the way out 6 months, listeners. This is where it's kind of fascinating. We were at an 8.3, so a pretty strong premium 6 months out a week ago. This week, a 9.1, so a 9-point premium 6 months out in the Bitcoin options, which again is kind of more old school. It gets back to the early days of this show when everyone was just hodling and all the long-term stuff was all biased to the upside. Nobody gave a crap about the puts. We hadn't really had any recent crypto winters to worry about. It all was just hunky-dory in the world of crypto. So these days, that kind of went away for a while. Now, maybe it's starting to come back. So kind of intriguing out there. In terms of OI, not a lot of shakeup this week over there at Deribit. 260,000 calls open on Deribit. It's up about 1,000. Again, it's Thanksgiving week, listeners. I don't expect a banger week. And the puts, 120,000, up about 2,000. So kind of unched on the Deribit OI front. No, it isn't unched, though. It's one of your preferred vehicles. Not the most preferred. We talked before about which vehicles you folks like to use to get your crypto options exposure in your securities portfolio. A lot of you like Mara, which is popping hard today. But if you want your one-to-one or at least closer tracking vehicle than a Mara or a Riot or some of the others out there, then Bitto has been your preferred flavor. At about a 19 even when we kicked off the show, up about 0.4 of a point. We've talked before, if you're not harvesting that dividend out there in Bitto, you're missing the lion's share of the upside out there. So if you're just buying the calls in Bitto longer term, as a lot of people are, we'll get to that in a few seconds, then you're missing out on a lot of the game, which is Bitto. That dividend yield is somewhere around 30-odd, 40-odd% out there. So it's a big chunk of the returns and also of the tracking. So if you're not there to collect that dividend, it makes things a little bit different. But at a 19 even right now, up about 4. The ADV also continuing to move in the right direction, up about 3,000 to 60K. So getting back to the good old days, not quite at nearly 100K a day, but it's also better than 15 or 20,000, which it was doing not too long ago. So again, the rising tide lifts all boats. Bitcoin back above 30K. People like it again. Bitto starting to get a little bit juicier. The use case, the demand for options increases. Rising tide, again, lifts all boats out there. And the vol continuing to be lifted as well. About a 61, up about a point from this time last week. So a while back, it wasn't really worth it to harvest some premium out there in Bitto. Now, maybe could potentially be a wheel candidate. Again, if you sell some puts at a 60 vol. Only caveat there is, again, you're going to miss out on that dividend if you don't get the stock put to you, so, or the ETF in this case. So bear that in mind, but intriguing stuff nonetheless. In terms of the most popular use cases, it's all upside all the time. Number 5, in terms of the top size positions in Bitto right now, are 29,000 of the, again, these are all Jan 2025, unless I say otherwise. So all long-term Jan. 29,000 of the Jan 20s. Number 4, 43,000 of the Jan 25s. Number 3, 68,000 of the Jan 35s. Number 2, our first and only regular Jan in the top 5 this week, 83,000 of the Jan 2024 65 calls. And rounding out the top 5 in Bitto, nearly 100K, 96,000 of the Jan 2025 30s. Again, that gets back to what I was saying earlier. You buy the Jan 2025 30s. I mean, Bitto can certainly get up there and you can make it, but also you're missing out on all that dividend stream along the way. So it does make it more challenging. It does reduce some of the use case for calls in this situation. So kind of intriguing. Again, if you're not familiar with the relationship between dividends and options, again, I encourage you to check out some of our educational content as we keep on rolling and check out what's cooking in the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, time to explore what's cooking in the altcoin universe. Let's start, as we are wont to do, looking at the top 10 digital assets from a market cap perspective. And number 10, once again, our old friend Tron, still holding out the number 10 spot. 9 billion almost exactly out there in terms of market cap. Number 9, it's Doge, everyone's favorite. You love it, you hate it. Our buddy Greg Magadini, he's all in, buys all the Doge. I'm joking, of course. Number 9, Doge, 11.3 billion. So maybe a little bit of that Musk love still spinning off. Whatever it is, it clings to the number 9 spot. Number 8, it's Cardano, 13.6 billion worth of market cap. Number 7, it's Solana. Man, this thing's been on the rampage of late. Threatening a 60 handle now. Was that 14, 19, not too long ago. $24.3 billion with market cap there. Number 6, USD Coin, $24.5 billion worth of market cap. Number 5, XRP, can't manage to sustain a 70-plus cent bid for long. 62 cents coming into this show, at least it was earlier. That puts it at a $33.3 billion worth of market cap. Still good enough for the number 5 spot, but not going to kick number 4 BNB to the curb anytime soon, I should say. BNB hanging out $39.3 billion with market cap at number 4. Number 3, it's Tether, $87.7 billion. Number 2, it's ETH, $246 billion, almost exactly. And the number 1, the big dog, getting closer to the 1T level, $737 billion worth of market cap for our old buddy, Mr. Bitcoin. In terms of the number 2 out there from a market cap perspective, ETH actually giving up a little bit this week. So Bitcoin getting a little bit of a rally, the ETH giving up a little bit. We were just a tick north of 2100 last week, 2101 on the show last week. This week, as we kicked off the show, 2046, down about 55 handles on the week. The range on the week, though, was a little over 200 handles, so that's impressive out there for ETH. We got up to as high as 2116. That was right after our show last week. The low came on Friday of last week, 1910 to the dark side, so pretty much a 200 handle range on the week. In spite of that, though, the vol managing to come in a little bit. We were at about 60 and a half, actually, on the show last week. And on the 7-day vol this week, about a 55. So coming in about 5 points there. If we go out to our traditional metric 30-day barometer for vol, we're at about a 59 on the show last week, 55.25 this week. So coming in almost 4 points there as well. And going out 6 months, we were almost at a 63, 62.7 on the show last week, 61 even this week. Let's see what the Skew story is telling us out there in ETH land. It was at a positive 5, about a 5.1 in the weekly Skew last week. This week, positive 6.4, so moving to the upside direction for all you bulls out there. 30-day Skew, 5.5 this week, 4.25 last week, so also ticking up, which is kind of interesting. And if we go out 6 months, wow, I got a whammy there. Positive 8 last week, dropping to a positive 5.5 this week, so longer-term upside, maybe the fact that ETH couldn't maintain that rally, whatever it is, some of that longer-term upside optimism seems like cooling a little bit. Still positive 5.5, but not like what we're seeing in Bitcoin where it's all upside all the time the farther you go out on the term structure. In terms of OI, a little bit more action out there on Deribit this week. 2.41 million calls opens up about 70,000 from this time last week. The puts 1.1 million up about 80,000 on the week. Let's run through some of our other altcoin staples. Then we'll get out of here for this truncated holiday week, listeners. Solana, like we said, just continuing the rampage this week. 54.66 last week on the show. 57.60 this week, up nearly 3 handles on the week again. Man, it doesn't seem like that long ago. It was like 19, struggling to break the 20 handle to the upside. Can it do it? Looks like, at least for now, the answer is a resounding yes. Listeners, XRP, we know the deal out there. It's really struggled to maintain any upside. It was 65 cents last week, 62 cents this week. So again, giving up about 3 cents. I know you XRP lovers, you want it to pop. You want it to pop hard. You thought maybe some of these rulings would be the catalyst, and they were for a little while, but can't really sustain that upside. Not like Doge. Doge, 7.6 cents last week. A whopping 7.9 cents this week. So continuing its explosion to the upside. Litecoin giving up the ghost a little bit this week. 72.82 last week. 70.25 this week. Puts it down a little over 2.5 handles on the week. Let's run through a few others here. Let's go to Cardano. 36.7 cents last week. 38.6 cents this week. So up nearly 2 cents on the week. Polkadot, $5.50 last week, $5.37 this week, so down almost 15 cents on the week. And everyone's favorite Shiba Inu, actually given up, I should say, a little bit. It was 0.0088 this week, 0.00000085. So unfortunately, listeners, no Shiba Lambos this week. All right, listeners, that is going to do it for the Crypto Rundown this week. I want to thank our guest, Michael Dunn from Bitnomial. If you're intrigued, you want to maybe another player, another exchange to check out in the world of crypto derivatives, and you are intrigued by the world of all things physically delivered, then Bitnomial is waiting there for you. You can check them out at bitnomial.com. Pretty easy to find out there. And, of course, if you want to check out all of this data we're talking about on the show, but we're really just scratching the surface. In fact, after Greg joined me on the show last week, I talked to him a little bit, and he added even more layers of data to our system that we could check out for the show. So we literally are just scratching the surface. We'll have to find maybe some way to incorporate some of that additional data on the show going forward. There's a lot to unpack. They're much more than just Skew and Vol. But again, it's only a roughly 40 to a minute to 1 hour show every week. So limited how much we can squeeze in. But a lot of data for you folks to kick the tires and light the fires on over there. Amber Data, AMBERDATA.io, the place to go to check it out for yourselves. No content tomorrow there. It is a truncated holiday week. Coming back at you on Wednesday for a little bit of the old options boot camp. So listeners to this show should definitely be tuning into that. Should be a fun one. Then, of course, we're off for the holidays for Thursday and Friday listeners. But we'll see you back here next Monday. Another episode of the Crypto Rundown. Have a great holiday and stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.